We never gave up. Not for one day have we thought that we will be closing or pivoting significantly, but we did
Mm-hmm.
reshape ourselves, our strategies, our expansion plan, and so on and so forth.
The moment you start a business, at least first 8 साल या 6 महीने तो कुछ नहीं आ रहा होता है. So how do you plan for that entire thing?
My reason was to move into startup was not that I wanted to move out of something.
Right.
So I wanted to move in for the core reason of moving into something. I don't think there's any sense of braveness in not raising fund at all, because you need validation. Have a sense of detachment with your first product, because you should be able to pivot. You should be able to change from one channel to the other. You should give fair chance to other products, other channels.
Hello and welcome to a brand new episode of Fintech Ki Baat Dil Se. In today's episode, we have with us the very interesting Pramod Kathuria, founder and CEO of Easyloand. Hey Pramod, thank you so much for joining us today.
Thank you, Shreyas. Look forward to a very interesting discussion with you today on Fintech Ki Baat.
Indeed, we're super excited to hear from you everything about the lending industry and specifically what's happening in the home loan landscape, right? Interestingly, in my 8 short years of being in the fintech industry, I've seen the industry evolve on digital lending, insurance, etc. And one of the, I would say, in my observation till now, least impacted in the industry was home loans industry because of certain restrictions, right, that were there in the paperwork or underwriting process, and very few companies are actually even trying to innovate on that part. And it's great to see more and more players getting into the industry and starting to try and make a dent and create more impact in this industry. So it's a real pleasure to see Easyloans as an organization and you making an effort to make a dent over there. Having said that, Pramod, thank you once again for your time, and let's take it from the top, right? Would love to hear you about your journey of entrepreneurship, of what were you doing before starting Easyloans and all of that. So over to you.
Thanks, Shreyas, once again. So I started my career with Dotcom. So now we talk about startups in around the Y2K period. If you remember, it was all about Dotcom, right? Everything was going in. They were disrupting the way information was kind of circulated. The marketing was happening. So right from campus, I joined a company called IndiaProperties.com, which was my first interaction with real estate and PropTech. Later, I moved in with ICICI Bank, where I spent several years and had a very embedded experience on the housing finance as well as on the property services side. Then I had almost 15 years of experience put together in the real estate, and I worked with leaders in the industry on the residential as well on the commercial side. My last position was based out of Hyderabad, where I was looking after all the functions at Hyderabad Aero City. And pandemic happened. My family was in Mumbai. I came back to Mumbai, and the following 6 months during the pandemic, the first wave, while we were all working from the home, I started working on multiple ideas, essentially the business plan, very, very seriously. Unlike earlier times wherein this thought came in and gone, this time around it kind of stayed with me. I started working on the business models, started talking to industry, and finally zeroed in on one real world problem, which was mortgages. And mortgages is where we found there was a lot of legacy issue. There was a lot of traditional approaches to the entire discovery to onboarding customer. And I picked up that as a problem to really solve. So I come from a corporate background, and like a typical formula for setting it up as a founder, I put in about 20 years of work experience in the corporate, and every bit of it was very, very interesting. I never thought actually for the first 18 years that I will set up a business. It's only in the last year or so that I really thought that I wanted to do something. All thanks to Indian economy, the way startups are seen over the last 15 years, some of the best innovations, some of the best companies have actually come from that, space. And that said, both my parents, my mom retired from state government. She was a teacher. My father retired from central government. My wife was a banker, and like it or not, I mean, she's also into the startup ecosystem. So life has come sort of to this, and my experience, fortunately, has been always in setting up a function in all the companies that I work for. Either I was setting up a function or I was scaling. And when I look at my role at Easyloand, essentially this is the toolkit I'm using here in my current role.
Understood. So pretty interesting, right? And as you said, you have experience in setting up a function and in some cases scaling it. So it's 0 to 1 and 1 to 10 kind of the journey. And that is essentially what helps a lot of entrepreneurs, and many of them in essence are missing it in the start and they kind of struggle with it a lot. But I think that helps you in this case as well. Having said that, what was that? Was there any specific moment or any specific instance or any specific event that inspired you to start up Easyloan as such?
Yeah, so there one or two, and I think it was a trinity of sorts which came in together. So one reason wasn't good enough, I would say. It took more than one reason to really start this. One, I wanted to use my experience on the real estate as well on the housing finance, add a layer of tech and do something about it. And there were so many ideas there. I mean, right from prop tech to fintech, there are a bunch of ideas, and I all of them excited me at that point in time. Number two, pandemic, which played a very, very critical role. It forced you into an environment which is online and completely new dynamics. So those business models which were making sense a year before started kind of cracking down, and now you have to look at those business models in a slightly more digital way. Number three, my personal experience also, I was trying to sell a property in Hyderabad. The first buyer could not get home loan because it was pandemic. And I got the second buyer who took like some 7 months to finish the entire transaction. Part of it is to do with the loan that he was taking. And eventually that also told me how big that problem is in an environment which requires which avoids physical interaction. It becomes significantly tedious for a customer to really complete a transaction there.
True.
So these three things, I think the biggest was pandemic, which was the force of nature, which sort of really accelerated the thought process and pushed me into starting at that point in time.
Makes sense. No, I think most of the time it is multiple factors that come in. I think this was probably the right timing when you're already passionate about the industry, and that kind of helped you get going to kind of build. Awesome. So in this entire journey of almost, I would say, 3 years now for Easyloans, or slightly more?
Yes.
Perfect. So in this entire journey of 3 odd years, right, of building Easyloans, was there any specific moment जब आपको hit हुआ कि यार नहीं ये अब भी चल पड़ा, like this is when it actually will catch up, this is going to work?
So Shreyas, there were moments that I thought अब एकदम से चल गया है, it is a kind of a hit now, and then there are many such moments wherein I thought कि अब ये नहीं चलेगा. So it was a mix of both that. So yes, when we started our operations in April, we kind of got a lot of tailwind. A lot of tailwind, because I spent about a quarter only talking to bankers, the leadership in the digital side, the leadership on the business side, and everybody was echoing that they wanted to do a lot on the digital. Their board meetings, their leadership meetings were all talking about how is it that we can do significantly more on the digital acquisition, do a better front end, do onboarding of customer digitally and all that. Now, banking landscape is such that you have a public sector set, and you have a private sector, and then you have housing finance company. The NBFCs in home finance are called housing finance company. So all these three sets have their own digital journey. There's no standard approach to digital. Some of them would be little ahead. A lot of them will be looking at everybody else comp set and then be last one to start anything. Few of them is still not started on the digital journey, right? Which could be because the way they look at their customer experience, the way they are placed geographically, their end customer, and so on and so forth. But yes, there were moments of wow, like I said, ki ab chal pada. So April itself, when we are able to get like back to back about 25-30 bankers sign up with us,
Wow.
and they wanted to work with us. Everybody wanted to get customers from Easyloand, right?
Mm-hmm.
So we thought up to chal gaya, because you've really been able to close the supply side of it. They're happy. Bunch of those guys were also talking about, oh, we can do this, we can do that, and so on and so forth. So a lot of it, and pandemic is intense at that point in time.
Right.
So mind you, pandemic also goes through 3 cycles, wherein it kind of goes down and become more independent, and then they say, do they need our digital kind of thing? So that's when we thought, बहुत अच्छा चल गया. And we were able to quickly scale into 3 geographies: Mumbai, Pune, Bangalore. These are very competitive markets. So if you're able to do really well in these 3-4 markets, you're able to almost take about a quarter or 30% of the business in the entire industry, right? And that was a big victory. And then there were moments wherein you had a winter on the funding side.
True.
People were looking at profitability. They were not looking at only sort of doing revenues or just scaling up blindly. So that kind of allowed us to take a pause, relook at our business model, design is better, push efficiency, productivity more, stabilize yourself in these 3 cities. So there was a little changeover, I would say, like everybody else out there. We did that, and winter extended for a long period, and we realized that it's going to get tough. Although we never gave up, not for one day have we thought that we will be closing or pivoting significantly, but we did reshape ourselves, our strategies, our expansion plan, and so on and so forth. And then again we got more investment, and we are in a shape right now that we are hungry to expand. We have already expanded 4-5 more cities on the top of what we were doing in the last 8-9 months, and then now we are trying to double our workforce, right? So that's how it is. So now again we are in that moment. So there was a moment that time, then about 12 months back again that moment came in. Again we are at this point in time just going about to live our dream.
Yeah, amazing. I think there is always a roller coaster journey in the early days of startups, right? कभी लगता है नहीं अभी तो आगे जाएगा, then ऐसा कुछ हो जाता है या something happens and you are like, now it's about to crash and you have to kind of do the SOS stuff to kind of get it afloat. And then ultimately when you find a footing, it starts scaling up. So I think great to see you. I mean, great to see that cycle is kind of, at least one round of cycle has been done for Easyloans, and now you guys are scaling up and onwards and upwards. Having said that, taking a step back, I wanted to ask you one question about getting into entrepreneurship. And this is a question that I get up from a lot of my audiences. How do you plan to build a business financially for yourself, right? As a founder, like you have a steady income when you're working in a corporate job, हर महीने salary आ रही है, पता है finances कैसे होने वाले, and you can plan well ahead into the future. The moment you start a business, at least first 8 साल या 6 महीने तो कुछ नहीं आ रहा होता है. So how do you plan for that entire thing?
So there are a lot of theses to a lot of people out there think very differently. But to me, in my case, wherein you have worked in corporate, you've done reasonably well commercially, role-wise, and you're happy. There's not much complaint that you have that you're not liking the role or you're finding it toxic and so on. So I did not have those challenges. My reason was to move into startup was not that I wanted to move out of something.
Right.
So I wanted to move in for the core reason of moving into something.
That is really important.
So and that's an ideal case scenario, right? But it will play out very, very different for very different people at different stratosphere. So for me, that good commercial solid experience of 20 years allowed me to take few risks. And you can go deep into that, without a steady income. So income wasn't the top of mind for the first few years. It is still not top of mind today. And for example, I may still not have anywhere close to my income in my previous corporate roles. But that is secondary because you're looking at now setting up a business. So it really helped me. I think for anybody who's got corporate experience and wanting to do it, this should play because you have baggage, you have family, you got a certain lifestyle, and you want to change few things, but you don't want to disrupt that. So I think that ideal case scenario would be that you really planned it well, and you can consider the first few years to be somewhat not a standard income paying, and then it kind of gradually picks up, because as your business will pick up, it will also have ability to give you steady income.
True.
But
True.
I generally think that hence there are two ends of a career which are very, very good from a timing perspective, not from a numerology or auspicious and so on, so forth, purely from the financial standing perspective. One is when you go very early,
Right.
because after you're not created too much baggage. Probably you're not married at that time, you don't have kids, for sure you've not bought a house, so you don't have a EMI running. So things like that, you're very asset light at that point in time.
True.
So अगर आपने startup किया and it has taken slightly longer before it started giving you a steady income, you will be able to handle it, right? Because आप अभी पढ़ाई करके आए हो, so you were not in an income zone anyway, so you kind of extended that for a few years. It is a good time. The other one is when you put in few solid years of commercial experience. Commercial means corporate experience where you've been able to save something, and it allows you cushion for a few years to go with a bit of a swing in the income, and it's not steady, but you can still handle it without having to create unnecessary stress in your lifestyle.
True. No, makes sense. And for fintech, from an entrepreneurship in fintech, there is always a dilemma or a dichotomy, right? One is that majority of the fintech founders that I've seen are people with 15-20 years experience minimum, and that is what you need to start a fintech, because the kind of industry knowledge, the deep domain expertise, the kind of network, the business connections that you need takes that much time. And the other end, as you said, right, entrepreneurship is something that if you know that you want to become an entrepreneur, if you have some idea, you should pick it up and also kind of start off really early in your journey, so that you kind of don't get that you are asset light and you kind of can get through it. So how would you balance that when you are looking at people kind of starting up in entrepreneurship, in fintech specifically?
So very interesting, Shreyas. I think it is coming because you are also experienced on the finance or the BFSI side. So fintech, I think what we see today, barring say the blockchain, crypto, and all that. For once, I'm kind of keeping it little aside. A lot of it is really solving real world problem or innovating on an existing layer. Fintech is a mix of finance and technology. So either you are heavy on technology or you're heavy on finance, or you're probably balanced very well. But you have these two components nevertheless, right? So if you're, for example, a technology player, a fintech who's really innovating on the tech side of it, you need a certain base layer of experience, which you probably in your experience have realized that these things can be improved a lot. And this is something which is lacking, and hence your ability to solution it is a lot better. And which is why you say that there is a general tendency of some experience before a fintech startup or a founder gets going. Similarly, on the finance side, you have seen you're a technology professional, and having realized that this has a very good strong use case on the finance side, and that's when you start doing it. Seldom will you find that you start your career with both these domain knowledge or one of these domain knowledge, right? So, and hence the startup at those times would either be native to tech, because you're good in tech, right? Technically you're sound, and you've seen some problem, and then you resonated with that and you pick it up, which is essentially coming from your experience in real world. And it could be that you're traveling in a certain way, you are consuming clothes in a certain way, you're consuming lifestyle in a certain way, and then you face that problem and you bring the tech layer into it. On the finance side, you typically go out there and you really struggle on something, and then you say, now this requires a solution, let's pick it up and solve that. So I think that's where it is. But times may be changing and are changing, because as you have some benchmarking, some referencing, all of us start thinking, whatever is our belief set is really based on some referencing. We start liking, following somebody or some sectors, and hence you'll find that gradually it doesn't have to be a thumb rule that fintechs will or the founders will have some experience. As you have more and more people are reading about successful fintechs, and they would like to do it. They won't wait for 5-10 years of experience
Makes
before they
sense.
start solving a problem. They'll probably do a 6 month internship and it's still good to go, or without even that internship, good to go. And they
Makes sense.
gradually pivot it, get into something which is real world, because more often than not, and you have to be slightly less passionate, less emotional. Passionate is a good word. I mean, you should be as passionate as possible, maybe overflowing on that. That is a sort of a requirement.
Right.
But what experience tells us that you can be less emotional about your first product. You have to be okay with changing a little bit, because even if you're not changing and you think this will work, it's not about belief. It's just about your ability to transit, your ability to adapt.
True.
If you think for 5 years the same product will remain, or whatever we are doing is going to be perfect, it's not going to be, because then I'll become a public sector bank kind of thinking, right? So I have to, our value remains in being agile and adaptive. And I think these are the things which will allow early starting of fintech, as opposed to the point that you were saying that a lot of these people have a lot of experience before they start fintech.
It makes sense. I think that brings a lot of things into perspective. And as you rightly said, once the founders identify the kind of the problem statement or the issues, and they get some sort of exposure in the industry, they would want to start off. And as you said, the key is to not be married to the solution that you develop with the first, kind of keep it evolving. It makes a lot of sense. Having said that, right, moving on to another really interesting question that I get a lot is, being a founder is essentially a full-time job, at least in the early days. That kind of also is really stressful, because you're dealing with a lot of aspects, multiple sides in your business as well as in your personal life many times. So how do you kind of manage the mental health and the stress levels of dealing with all of that? Because corporate life what I've heard is corporate life isn't as half stressful as being a founder.
You heard it right. Being a founder could be 3 times or 4 times, because you're worrying about everything, right? Imagine you are sales head in an organization. Right. Your stress will be about sales.
True.
Then you are, say, finance head. Your stress will be about finance. In an evolved role, you may be a CEO, and you will have multiple functions reporting into one. Still, your mostly the continuity of the organization is not your stress. Right? You still or their background work, which is already done, which almost allows you the continuity in a sort of a static manner or a linear fashion. As a founder, you have like today I do my probably 4 roles, so there are 4 department heads rolled into one that I handle. And anything new comes in, I have to take it, because we are built like that. We are lean organization. Most of it is about output, and hence the support teams are built over a period of time, and then we add as we go. So yes, the work stress is there, and you have to handle that timely, because it's all about agility there. Number 2 is about continuity of the business and where you are going. You also look at the comp sets, some of them not doing so well, some of them better, and then you have to bring the right emotions out of it, because at the end of the day, you have to look into the comp set and the ability and the opportunity, because not everything is known to you. You are just about starting. 3 years is starting, 1 year is starting, 6 months is starting, right? So how do you know? You compare yourself with some of the comp set. What did they do right? How did they land? Where they land? And so on and so forth. So I think how I manage that is I try to do a little bit of workout, meditation, less meditation, more of workout and physical activity, a little bit of spirituality and things like that. That helps. Sounds very old-fashioned, right? I mean, I'm like, I don't do like I don't spend hours there, but I do try to spend some time, maybe 15-20 minutes of connecting on the spiritual side, and a little bit of workout. That really helps. And yes, you have to switch off. It's hard to do a complete switch off, because you're really attached to the business. Being a true blood founder, and it's not easy, and you are constantly on the phone, you're constantly on the laptop, and I sometimes take a sense of pride in that, but you're always there. But yes, you have to figure out a formula so that you remain sane and you disconnect when required. You do take a little time off, focus on the family and so on and so forth, so that you remain balanced. Very,
Indeed,
very
indeed.
critical. And like I said, I do these two, three things. People who know me from past, they say, "Yeah, it's spiritual." I mean, least likely, not that I was. I always had a bend. Like, I spend time now. Today, I
Mm.
try to spend 15 minutes, 20 minutes in that direction.
Definitely, I think I've heard this a lot from a lot of other founders as well, right? Workout, meditation, and some silent time or some alone time, as they call it, kind of that helps you connect with yourself better and kind of put things into perspective and maybe even prioritize stuff. So, thanks a lot for that. I think this has been really helpful. One final question before we kind of close this segment, the founder story, which is your top three don'ts for budding entrepreneurs who are watching this.
Um, don't go too deep uh, and spend years into something unless until you got a commercial validation, which means you need to raise funds at some
Right.
point in time. You can take 6 months off, you can take a year off, but I think that's a zone that you need to have a validation.
True.
There's no, I don't think there's any sense of braveness in not raising fund at all, because you need validation. Number
Agree.
two, you need to look at margins. Margins are very, very important. If you have a low margin business, you will have to do volumes and a lot of it and continue
Right.
to struggle. So, and the third part is, like I already covered, have a sense of detachment with your first product, because you should be able to pivot. You should be able to change from one channel to the other. You should give fair chance to uh, other products, other channels, other geographies. Until you do that, you will continue to be subsumed in your own belief and probably not get the most optimum output.
Perfect. Perfect. I think that helps. Thanks a lot, Pramod. This has been really amazing and insightful. Having said that, we'll be back with the second segment very soon. So stay tuned for it.